Standard cost of labor. The standards are given as direct labor is given for every 12 minutes is given as per unit requires 12 minutes, and for 12 minutes it costs $10. So that is what is the details which are given. We see for every single unit the labor cost is spent at $10, but for every single unit the time required is 12 minutes. So in simple terms, direct labor cost is for every 12 minutes it is $10. Next, the actual cost is already given to us. In February, the manufacturer spent 2.51 million. So the total actual cost of labor is already given to us. Only thing what we have to do is we need to adjust the standard cost of labor. Okay. So now the time spent, actual time spent is 50,000 hours. So for 50,000 hours, how much is the cost? Here for every 12 minutes, it is $10. So now we need to calculate it as 50,000 into 60 minutes is how much is the cost. So let's put it as standard cost of labor is equal to, see, this is the logic. 12 minutes it is $10. For every 12 minutes it is $10. So we need to know the total time, which is 50,000 hours. It is how much? So 50,000 hours is 50,000 into 60 minutes. So because it's measured in terms of minutes, no? So 50,000 into 60 minutes is what time? So we have 50,000 into 60 into 10 divided by 12. That is the standard cost of labor. We see that that is 2,500,000, but the actual cost is 2,510,000. Okay. हाँ, 2,500,000. Yeah. So total labor variance is equal to, either way we can put it as 2,510,000 minus 2,500,000. So that is equal to, that is 10,000, 10,000 adverse. Let's take it up this one. Question number 77. The actual rate paid per direct labor hour for the period was. Question number 77. SS Limited operates a standard marginal costing system and extract from the standard cost card for the labor cost of one of its products is as follows. We see labor cost is given as 5 hours into $12, which is 60. Um, the actual results for the period were as follows. Production is 11,500 units. Labor rate variance and labor efficiency variances are given. And we are asked to find out what is the actual rate paid per labor hour. The labor rate variance, the labor rate variance formula is the difference between the rates. That is the standard rate minus actual rate applied for the total actual quantity, this labor, actual labor hours, okay, which is equal to, so let's start writing labor rate variance is equal to, the formula is actual hours applied at standard rate per hour minus actual rate per hour, and that value is given to us as 45,000 at first. Out of the three variables, that's the total actual hours, the standard rate per hour, actual rate per hour, we know only one variable, which is the standard rate per hour. The standard rate per hour for every 5 hours, they have paid at the rate of $12, so which comes out to be 60. So rate per hour is given to us as $12. Standard rate per hour is equal to $12. 45,000 at first. So unable to proceed further. So let's take the other one also. Now we have labor efficiency variance is equal to, it is the difference between the hours, the standard hours and the actual hours applied at the standard rate. So the formula is standard rate per hour. To find out the difference between the standard hours minus the actual hours, and this is given to us as 30,000 at first. Out of the three variables, we know what is the standard rate per hour, which is $12. Okay, then the standard hours, the actual hours, standard hours, yes, we can find out standard hours. The point is, for every single unit, an extract from the standard cost card for the labor cost of one of its products is given as. So for every single unit, they require 5 hours at the rate of 12. So that is 60. So the requirement of number of hours for every single unit, if it is 5, the actual production is 11,500. So for 11,500 units, how many hours would it be? So we just multiply 5 into 11,500. So we arrive at what is standard hours. So out of the three variables, we know two variables, so we can find out what is the actual hours from this. Let's present it. Standard rate per hour is equal to, we have just $12. Okay, then we have standard hours. Standard hours are, every unit it takes 5 hours, so 5 into the actual production is 11,500. So how much would that be? Labor efficiency variance is equal to, we have 12 into 57,500 minus actual hours, and that is equal to 45,000 adverse. So we get, we proceed further. Take
Excuse me, ma'am.
Yes, dear.
Ma'am, the labor efficiency variance amounts to 30,000 adverse, ma'am.
What did I write? I'm sorry. I'm really sorry. I wrote it as 40. Yeah, 30,000. Sorry. Okay. Now take 12 and 57,500 to the other side. Okay. So if it goes to the other side, 30,000 divided by 12, how much would it be? 2,500. 2,500. So 2,500 actual hours goes to the other side. So that should be 50. Um, it should be more than the standard hours by 2,500 because it's an adverse variance. So we have to add that 2,500 to 57,500. So actual hours, since it is an adverse variance, actual hours is equal to, the standard hours are 57,500. Since it is an adverse variance, the amount, the calculated value of 2,500 has to be added to the standard hours. So that would be 60,000. 60,000 hours. Done. So once we know the actual hours, we can take that and substitute in labor rate variance, since we have already partially we have substituted because there were two unknown variables, we couldn't proceed further. Now that we know what are the actual hours, substituting actual hours in that equation, we can find out what is the actual rate per hour. Now actual hours are 60,000. Minus actual rate per hour is equal to 45,000 amperes. Solve and tell me how much is the actual rate per hour. So it is more by, is it 12.75?
Yes, ma'am.
Okay. So we would get actual rate per hour is equal to, it should be more by 0.75. 0.75, which is equal to, question number 82. PP Limited operates the standard absorption costing system. The following information has been extracted from the standard cost card for one of its products. Monthly production is 1,500 units. Direct material cost is given 7 kgs at $4.10. It is 28.70 per unit. Actual results are also given. Production is 1,600 units. Direct material cost is given as 52,200 for the consumption of 12,000 kgs of material. It has subsequently been noted that owing to a change in economic conditions, the best price that the material could have been purchased was 4.50 per kg during this period. The adverse material price planning variance was. When we talk about planning variances, right at the time of planning itself, they were unable to anticipate what would happen in the future. So at the time of planning, they were unable to predict the changes which would happen in the economy. So they have estimated that the standards would be 1500 then, but the actual was 1600. Uh, the price is mentioned. The direct material price is given as $4.10. Then actual something else. So we we need to calculate here. It has subsequently been noted that owing to a change in the economic conditions, the best price that the material could have been purchased for was at 4.50 per kg during the period. Now, the question is asking us to uh, discuss the price variance. They have planned it at 4.10, but just calculate this one and tell me 52,200 divided by 12,000. Somebody please calculate.
4.35, ma'am.
4.35. So this part of it comes to 4.35. So there is a mention that because of changes in the economic condition, they should have planned at 4.50. They fail to anticipate this change which would happen in the that right at the time of planning itself. So they cannot assume whatever happened in the past will also continue to happen in the future. So the variances can happen at the time of planning, at the time of implementation. So here in this case, the question very clearly talks about they should have they should have taken the price to be at 4.50, but wherein they have taken at 4.10. By taking it at 4.10, the standard at 4.10, the actual it is 4.35. It will definitely show it as a adverse. But is it adverse in terms of operational variance? It is adverse in terms of not being able to plan it appropriately. They should have taken it at 4.50. So now, what is the planning variance? So the planning variance is what we have to talk about. So planning, the standard was taken at 4.10. The actual is at the it the value should have been at 4.50, 4.1 and 4.5. So we need to find out the variance between what was planned, what actually should have been planned. Okay, so take that. So there is a difference in the price to the extent of 0.40. 0.40. So now that will be applicable for the entire quantity of material. The quantity of material is given as for every single unit. There is a requirement of 7 kgs. Now this quantity will be applicable for the entire actual quantity. Actual quantity is taken at 1600 units. So the total standard quantity which is taken would be 7 kgs into 1600. That's the total standard quantity. This variance will be applied for the entire quantity of that 7 into 1600. So let's write what is standard quantity. 7 into 1600 units. Okay, so that would be 11,200 kgs. So the variance then will apply for all 11,200 and 200 kgs of standard material, right? Material price planning variance is equal to into total 11,200 kgs. 83. The material price variance for the month of January was 2000 favorable, $2,000 favorable, and the usage variance was 450 favorable. The standard material usage per unit is 6 kgs, and the standard material price variance is 3 per kg. 600 units were produced in the period, and there was no change in the inventory levels during the period. What is the amount of material purchases? What is the quantity of material purchased in the period? Similarly, the way we have done the labor variance, the previous we just substitute in the variance and then find out the unknown variables and arrive at that is how it has to be done. So let's start with the first one is material price variance. So what's the formula of material price variance? Let's put it as material price variance is equal to the difference in the prices applied at the actual quantity into the standard price minus the actual price per unit, and that happens to be as 2000 favorable. Out of the three unknown variables, actual quantity of material, the standard price per unit per kg, the actual price per kg. So three things have to be known. Standard material price is given as 3 per kg. So one variable we know. Then 600 units were produced in the period and there were no change. 600 units done. Apart from that, no other thing is there. So only one variable we know. So actual quantity into the standard price is 3. 3 minus actual price is equal to 2000 favorable. Let's proceed further with the next one. The next variance is usage variance. Material usage variance is equal to, the formula is the difference in the quantities consumed, that is the standard quantity minus actual quantity applied at the standard rate. So standard rate per unit per kg into the standard quantity minus the actual quantity, and that happens to be 450 favorable. The what do we know out of the standard rate? Standard rate is 3. We know that the standard quantity, because the actual production is given to us as 600, so we can also find out what is standard quantity. So actual quantity is not given. So out of 3 unknown variables, if 2 are known, we can find out what is the third unknown variable. So let's take it up. Standard rate is given as 3 into standard quantity. How do we calculate? It says that the standard material usage per unit is 6. So 6 into how many actual units were produced? 600 units. So that gives us the standard quantity of material minus the actual quantity of material which is not known to us. So is equal to, we have this as 450 favorable. So take 3 to the other side. 150, it would be 150, 6 6 are 36, 36, and there it is 150. It is a favorable, so the actual quantity is less than the standard quantity by 150. Okay, we have it here as 6 6 are 36, 3600, 3600 kgs minus the actual quantity is equal to, we have it as 150. Since it is a favorable variance, so actual quantity would be less than the standard quantity by 150. So we have it as 3600 minus 150. Then that will be 3,450 kgs. We have C, option C. 3,450 kgs. This time it is operational price variance. Earlier we have done the planning variance. Variance can happen at the time of planning. Variance can happen at the time of operational, that is operating, implementation rather. So here the question is asking us to find out what is the material operational price variance. The details are given as the following data relate to product Z and its raw material content for September. Output is given as 11,000 units of Z. Is there so much, lot of disturbance? Are you able to get my voice? I can't help it. There's some construction work going on in the next building. Is that okay?
Yes, ma'am.
Yeah. Output is 11,000 units of Z. Um, the standard material content is given as 3 kgs per unit at $4 per kg. The actual output was only 10,000 units of Z. Material purchased and used are 32,000 kgs at 4.80 per kg. It has now been agreed that the standard price of the raw material purchased in September should have been $5 per kg. But how much did they decide? They've decided it at $4 per kg. So the standards were decided at $4 per kg. But it is opined that it should have been, instead of $4 per kg, it should have been $5 per kg. So that is what um, they agree. Price variance, material price variance will be the difference between the standard price and the actual price. The actual price is 4.80. The standard price has to be taken at 5 per kg, 5 per kg, 4.80 per kg, and the difference in the price is applied at the actual quantity. How much is the actual quantity? The actual quantity is 32,000.
10,000.
32,000. So just apply 32,000 into actual quantity into the standard price per kg minus the actual price per kg. All three variables are known to us. Actual quantity is 32,000 kgs. So is equal to standard price, instead of 4, it should be taken at 5. 5 minus 4.80. So it would be a favorable variance. $6,400. Yeah, 6,400 favorable. Today is Thursday, no? So this week we have one more class. I think tomorrow will be the last 1 hour class session. From Monday, I think one batch which I'm taking, that will be over by tomorrow. So from Monday, the regular slot of 4 to 6 will continue. So we can go back to that 2 hour slot. Okay. Does someone else also teaches this paper in the college? No, it's only to understand from where do you work out the questions. That is the only point I am interested to understand. Is this paper also done in the college by some internal faculty?
No, ma'am.
No. Okay.
Our course doesn't have it.
I didn't get you.
BCom A&F, the course that some of us are from, doesn't have this paper.
Okay. So in your BCom course, this is done. Definitely it would be done. Okay. So which textbook are you following there? All of you are not from the same semester. If Medha has this paper in the semester, does it mean to say that others are not from the same semester?
No, ma'am,
It
we
has from
different departments, ma'am.
I didn't understand.
We are from different departments, ma'am.
Okay,
So
okay. So all those who have enrolled into this CIMA program are attending this class. Okay, got the point. Okay, which textbook are you following, Medha, in the college?
management accounting from Margam publication, ma'am. The author are T.S. Reddy and Dr. Y. Hari Prasad Reddy, ma'am.
Okay.
Yes.
Okay. I think the conventional method of doing variance analysis in case in BCom level will be that one big table which is drawn, which has 11 columns. I'm assuming that is the format which you're following, wherein we have all the 5 variances under each
Yes.
category.
Yes, ma'am.
Yeah. Okay. I mean, that is very helpful when it is an essay question, that is a 20 marks or 25 or whatever is that highest mark question which is given. So wherein one particular scenario will talk about calculation of all the variances, but CIMA doesn't have that full length questions for 20 marks or a very big one. So every question is addressing only one particular variance. So therefore we have split that into this category and taking up the questions accordingly. Wherever we are, the logic is very important. Whether we are doing that a big table with so many number of columns and then putting it across, the logic has to be clear about how we are solving the variance analysis questions. Okay. Um, I think by now you must have already got the formula very well understood. Um Remember that, and then you can take it up. 85th question, let's see. The following data relate to product Z and its raw material content for September. We have budget output, which is 11,000 units of Z. Standard materials content is given as 3 kgs per unit at $4 per kg. The actual details are also given. It has now been agreed. Is it the same set of data? Yeah. It has now been agreed that the standard price for the raw material purchased in September should have been $5 per kg. Using actual units produced, what was the materials price planning price variance for September? Okay, similar scenario, but here it is the materials price variance, material planning price variance. There it was operational price variance. So what would be the difference? What would be the difference? The difference in case of prices, what initially we thought it to be as 4 per kg, now will happen to be as 5 per kg. So the variance was not in comparison with what is the actual price and the standard price. It would be about what was planned and what should have been the plan. So the variance has to be considered only about what was the standard price and what is the revised standard price. So let's take it as material price variance, 85th question. Let's quickly put this one. Material planning price variance is equal to, now it would be the difference between what was decided as the standard price. The standard price which was decided was 4 per kg. The revised standard price is 5 per kg. So let's first mention that. So the variance will be between 5 and 4 and 5. Because it is at the time of planning itself there was a variance. So we need to take the difference between 4 and 5, okay, and apply it for the actual quantity. The actual quantity will be how much is the actual quantity of material?
2000 kgs.
No, not the actual quantity. It will be applicable for the entire standard quantity of material. So that will be applied for the entire standard quantity of material. Standard quantity of material will be is equal to 3 kgs per unit. So 3 kgs into the actual production took place at 10,000 units. So that should be 30,000 kgs of material. So find out what is the planning variance. So it should be 30,000 adverse. 4 minus 5 is 1. 1 applied at the total quantity of material which is 30,000. Okay, I'll end the class here. I'll see you tomorrow. Okay, good day.
Thank you, ma'am.
Thank you, ma'am.